Oliver Slope is with us, and he is with Blue Line Futures in Chicago. So just kind of a mixed bag here on the grains. They're not accomplishing much of anything, but the corn, I thought maybe it would get a little bit of a kick out of that overnight export sale, and there's nothing there. So what does that tell you about the market makeup right now?
Well, certainly disappointing, and you hit the nail on the head there. And when I saw that number come across the newswire, I literally did a triple take on that before sending it out to clients just to make sure that that number was accurate. And it was, and we weren't really able to see really any follow through, which is a little bit of a caution flag here in the near term. I think some of the choppy trade is probably just likely on the back of end of month, end of quarter this week. And with the end of quarter, we've got a quarterly stocks report at the end of the week. So I don't see a whole lot of direction going into that. Maybe after that report and into the new month next week, we get some direction. But right now, funds have just been resilient on the sell side in the corn market. They are net short as of Friday's commitment to traders report to the tune of about 145,000 futures and options contracts. That's their biggest net short position since August of 2020. And at some point, you're going to start to see their powder run dry and maybe see a little bit of short covering. But what is going to be that catalyst and trying to time that is going to be the big question mark. I think a lot of that comes around demand. So we get back to the flash sale demand. Great to see that. If we can get some more consistency and some numbers like that, maybe that's what will spark this market and get it back moving north again.
What about the fact that South American farmers are now putting the new crop in the ground already? Is that going to keep any rally potential kind of pushed back a little ways?
Yeah, I think it probably could, and I've been saying it for the last couple of weeks, especially with this corn market. I think we probably just chop around 15 cents on either side of 470 until we get new direction. Now, seasonally, I guess you could make the case that we start to carve out a little bit of a low in the corn market as we head into October. Beans, I'm keeping a close eye on. We're at some huge technical levels, 1280, 1285. That's the 50% retracement, basically the middle of the trading range from those May lows to the July highs. It's also the spike low from August 8th. So a lot of good support there and what I think is an oversold market. And I think there's still some fundamental strength behind that market as well. But we'll find out as these combines continue to roll and we get to hear more yields from the fields, so to speak, to see what these farmers are actually coming out with. If it's better than expected, maybe there's some downward pressure down to 1247 to 1250. But less than expected, I think we can hold 1280 and maybe make a run back at 13 bucks.
Okay, I do want to take a look at the U.S. dollar index value before we get into our break because it was surging this morning and it's even adding to the gains now. We're up 450 points. This is on December dollar index futures. We're all the way up to 105.710. That just adds another brick to the load here, weighing down the grains. We'll come back in just a moment. We'll talk more with Oliver Slope. This time we'll talk livestock. Come on back. Oliver, your take on the market reaction following the cattle on feed numbers from last Friday. What do you think here?
Yeah, well, there just wasn't a whole lot to write home about in that report. And I think to start the week, you're probably seeing a little bit of profit taking from the funds who've been defending a really large net long position. Really back to April. Since April, they've been defending 80,000 contracts long. Friday's commitment to traders report has them long about 103,000 contracts. So a lot of strength there. The inability to see new news across the wires on Friday sparked some profit taking. Again, as mentioned with the grain markets, this week marks the end of month, end of the quarter. So position squaring is probably something we're going to see there. But it does look like we're largely just consolidating over the last week in that December live cattle contract. To break and close below 189 would maybe spark a little bit more long liquidation, but the market seems pretty darn resilient at this point, as it has been really all year. So I'm not sure what the catalyst would be to break it significantly lower from here. Maybe outside markets, money flow starting to flow around there, but certainly something to keep an eye on here as we round out the year.
Okay, thanks for talking with us, Oliver. Good stuff. As always, Oliver Slope of Blue Line Futures in Chicago. So, Tammy, that's how markets are looking right now. A little feeble on the livestock side for now, at least on the cattle market anyway.
We'll got some time to turn around.